Hey, good afternoon. This is Ken Jolliffe with BIS Commodities here in Cedar Rapids. Looking at the commodity trade here for the week of April 22nd. And wow, what a week we've been through here with within the grain trade. We've seen some wide ranges, huge volume, huge volatility. Looking at the closing prices here for the week after today's huge sell-off in the corn market. A market that at one time was up 27 cents on the week, closed up 6 cents on the July contract, closed down 6 cents on the July contract for the week. Taking a look at the December contract, something that traded up as high as 409 the other morning, we actually closed down 7 cents on the week in that contract. Soybeans seeing about an 80-cent trading range here from high to low this week. At one time we had July beans at 10.43. Today we closed them at 9.93, yet still up about 30 cents on the week. November beans up as high as 10.23 and a half midweek, closed at 9.80 and a half here this afternoon, up about 16 cents on the week. And even the July wheat, after seeing some good rains going through the southwest plains over the weekend, started out and moved up about 50 cents on the week, closed down hard here today to close the week up about 4 to 5 cents. As I said, there's been a lot of volatility this week, a lot of money flow coming in from managed money funds, from Chinese investors, and you put that in conjunction with some of the issues that's been discussed this week in the Argentine soybean growing areas of their wetness, slowing their harvest down there. It appeared that we even had some situations where maybe some exporters in the Argentine port area couldn't execute loadings onto the ships down there, and this may have caused some of the concern in the soybean spread activity that we've seen this week, to where we had the July-November bean spread just explode on Wednesday. They did retract some here this afternoon. The Argentine government did come out and lower that crop some, but maybe not as much as some of the bullish people were talking about earlier in the week. And their weather forecast down there does look a little bit better as we go into next week as far as getting these beans harvested. Granted, it's a smaller crop than was projected, even just a couple of weeks ago by the USDA. There is still soybeans down there. There's still beans to be processed into meal down there. So we're not in a situation where the world just all of a sudden got extremely tight on soybeans. It's just a matter that we had a capitulation of money coming in at the same time we had a world crop that maybe is a touch smaller than what it has been. As we talk about cash grain markets here, as we look at the soybean bases across most of the belt, bases dropped anywhere from 15 to 20 cents. We had huge movement of cash beans into the market. Even meal bases dropped back to as much as 10 to 15, maybe $20 under the nearby contract there, as we've got oodles of supply of beans going into the processor. The corn side of things, kind of the same story. There's a huge movement of cash corn. Locally here, we saw corn bases drop as much as 10 to 12 cents. Out across other parts of the ethanol areas of Iowa, dropped anywhere from 10 to 15 cents as domestic processors accumulated ownership that could very likely take them well into the latter part of spring, early summer, the way it looks here. So a lot of bushels exchanging hands here this week. When you look at the commitment of traders report this week, we could see a huge change of ownership. The funds are now only short about 30,000 contracts of soybean or of corn versus about 130 last week. They're long nearly 135,000 contracts of soybeans, now totally. So, and we talk about the volatility and the volume that we have seen. We had record volume within the CME soy complex twice this week. On Tuesday, we set a record of trading over 774,000 contracts of soybeans, only to have that record broken 24 hours later by trading over 800,000 contracts of soybeans on Wednesday. To put that somewhat in perspective, and you're looking at an exchange there that traded 4 billion bushels of beans in one day. or another way of looking at it is something larger than what we raised in the U.S. last year for a total soybean crop. So, we spent about 6 months, it seemed like, in a very sideways, low volatility trade, and this all of a sudden, came upon us here, huge this week, slowly growing in the past probably 2 or 3 weeks. And even with today's sharply lower bean market, I think the volatility, no doubt, is going to continue to be around us now for quite some time, as we are well aware that we are just starting the growing season here in the United States, let alone what I always consider, the northern hemisphere when we look across the whole world. So, we will trade weather, more each day, each week as we move forward. We are all well aware that there's a lot of weather people out here wanting to talk about either being too cold sometime this spring, being too hot sometime this summer, being too dry, being too wet, so that volatility is here to stay probably until we get through the major part of our growing season. Next Monday we'll have the updated crop progress report, and I would assume that we're going to have some good progress in corn planting. We have been slowed somewhat here in the latter part of the week across some of the belt because of rain, but it's very likely we could have a third of the corn crop already put in the ground here in the States. Very possibly we could have maybe upwards of 10% of the soybeans already put in the ground across the States. So weather-wise next week, looks like we've got an open window again after some scattered showers Sunday night to finish this corn planting season and get well started into the soybean planting season. So as we move forward, just kind of summarize things with the volatility, with the amount of contracts traded, with what's going on in the whole situation. I think we need to take a look at the highs that were posted this week, particularly in the new crop corn and new crop beans, and take a step back and think, all right, if we have some volatility, if we have some weather issues, can we go back to the highs? Very possible, but maybe those highs could be targets now as we move forward. As far as if the market has a scare, can we run up to those? And if we can, we need to continue to do pricing with either futures and options moving forward in both corn and beans, because we are trading or have traded above the insurance levels that were set here, for this crop. So, if you got any questions, give us a call here at BIS Commodities. We'd be just pleased to talk with you. So have yourself a great weekend. See you next week.